Welcome to Market Peaker. Creating a technical trading strategy is all about combining tools and discipline to make informed decisions. Let's walk through the key steps to build your own effective strategy. 1. Define your goals. Are you trading for short-term gains or long-term investments? Clear goals will shape your strategy and timeframes. 2. Choose your indicators. Combine a few key indicators for confirmation. Trend indicators, moving averages or Ichimoku cloud. Momentum indicators, RSI or stochastic oscillator. Volume tools, volume analysis or OBV, on-balance volume. 3. Set entry and exit rules. Entry. For example, buy when RSI crosses above 30 or when price breaks above a resistance level. Exit. Sell when RSI hits overbought territory or price nears a resistance zone. 4. Risk management. Limit losses with stop-loss orders and never risk more than 1 to 2% of your account on a single trade. 5. Backtest and refine. Test your strategy on historical data to see how it performs, then tweak as needed. Pro tip: stay consistent and avoid overloading your charts with too many indicators. It can lead to analysis paralysis.